Let's talk about the exciting frontier markets here at the Fondskongress in Mannheim. Welcome, Edwin Gutierrez, Head of Emerging Market Sovereign Debt at Aberdeen. Thank you for your time. How would you define frontier markets?
Well, frontier markets are a diverse set of countries. We have a map here you can see, perhaps, but they span anywhere from Eastern Europe, the Middle East, Africa, Latin America, and Asia. And what characterizes these countries is they're generally very high economic growth countries with very young populations.
Why should investors allocate to a dedicated frontier bond fund, and what are the benefits?
The biggest benefit for frontier market bond funds is the high yield on offer. Frontier market bond funds easily can offer 3% more in yield compared to mainstream emerging market bond funds. Mainstream emerging market bond funds can have some exposure to frontier markets, but generally it's a little bit lower. And also frontier market bond funds can access other parts of the market which mainstream emerging market bond funds may not access, such as local currency bond markets in frontier markets, or also corporates in frontier markets as well.
Why should I invest in frontier market bonds with Aberdeen?
With Aberdeen. Well, with Aberdeen specifically, we have a long history in investing in this segment of the asset class. We have ample resource to cover the investment universe. Our footprint globally allows us to tap into the opportunities throughout the globe. We have specialists in dollar-denominated bonds, local currency bonds, as well as corporate bonds. And our fund has been around for more than 10 years. It's not a very competitive asset class in this segment of the asset class. So we do believe that we have one of the most compelling offers when it comes to frontier market bonds.
There is a perception that frontier markets are volatile with high political risks. Would you agree?
Well, we won't deny the existence of political risk and volatility. The asset class does tend to be volatile in risk-off environments, since this asset class is, by definition, a little less liquid. But we do believe you're being compensated for that risk with an additional 3% yield. And we would also argue that political volatility exists in mainstream emerging market countries or even developed market countries where political regime change can be more frequent than in frontier market countries.
How have frontier markets recently performed, and what is the outlook for 2024?
Yes. In 2023, frontier markets had a phenomenal return. The index, the JP Morgan Next Gem Index, which is the frontier market index, was up 21% last year. And really, this was the place you wanted to be in emerging markets. Frontier markets are defined by very low correlation to U.S. Treasuries, and with one of the biggest headwinds last year for fixed income investors being rising U.S. Treasury yields, frontier markets were really a safe haven for investors. Now, this year, it's probably unreasonable to expect such high returns. We would think returns would probably be about half of that, but still pretty considerable. We do think that the global backdrop is very favorable. The fact that we're going to be getting rate cuts from both developed market central banks and also emerging market central banks, so that should be very supportive for frontier markets. And we also look at the commodity complex, which has been very resilient. And many frontier market countries are exporters of commodities, so we think this should also be supportive for frontier markets in 2024.
Thank you very much for the interview. This was Edwin Gutierrez from Aberdeen here at the Fondskongress in Mannheim.
Vielen Dank, Andreas.